Hi, welcome back to Tchaikovsky's Accounting After Dark. This is exercise 4-16 from the Kieso and Weygandt book. So right over here, we've got a company, and I think they call it C. Reither Company. I'm just calling it Reither. Has the following information for 2020. And now it's asking us to prepare a statement of stockholders or shareholders' equity. And so what I'm going to do at this point, because I think this is kind of a new statement for a lot of you, what we've been doing before is we've had, say, you've got your income statement, you're going to have a balance sheet, as we have statement of retained earnings and a balance sheet, but a statement of shareholders' equity is a little bit different. But what it's going to do is let's take a look at one. So if I go over here, do a search, let's do M for Macy's. And let's see if they have one on their queue. It's not necessarily a required statement, but it's actually something that as a investor, we generally like to see. And let's kind of go through this over here. And there we go. Okay, so this is a consolidated statement of shareholders' equity. And what this is really doing is that if I look over here in terms of the balances, it's showing me over here common stock, showing me additional paid-in capital, accumulated equity, treasury stock, other accumulated comprehensive income or loss, giving me total shareholders' equity. Let's take a look at this $6,315,000,000. And if I come over here to my balance sheet, and $6,315,000,000, right? So what this whole thing is right over here, it's showing here, Macy's, essentially this number over here on the balance sheet. It's kind of telling me like what's going on over here with my shareholders' equity, like what happened with common stock. Did I issue more shares with additional paid-in capital, right? That's the additional amount beyond par value. Accumulated equity. I don't know. I think it's another way of saying something about this is actually retained earnings. So my equity, there's another way of saying retained earnings. So you've got an $8 billion beginning balance, cumulative effect adjustment. There we go. 158 million, net income of 136 million, common stock dividends that's being reduced over here. Then over here, I'm showing my net income and then common stock dividends. They're paying out dividends that are even though it's beyond their net income. So as you kind of look over here, this is kind of a way that it's kind of helping us kind of reconcile from period to period. Over here, this 5.8 billion, this is really coming from right over here. Where was the 5.894 billion. That's where that amount is coming from August 4th, 2018. So again, this is kind of helping us kind of go through and give us a little more insight into shareholders' equity. Now, I realize that most of the times when we've been going through and preparing financial statements, I would have you list out, okay, you're going to list all these things. You're going to list retained earnings. You're going to list additional paid-in capital, common stock, and again, it depends on the corporation in terms of how they want to go through and do their summaries. But again, this is just kind of a table showing us how we get from our beginning into our end. So what we're going to do here is in terms of going through and preparing a statement of stockholders' equity, the way we're going to do it is we're going to have like our beginning balances. And when we're going to have these beginning balances over here, it's going to be for common stock. You might have one here for par and then additional paid-in capital. This particular question is just giving us common stock. You're also going to have over here, so common stock, and we'll call this, we'll go with retained earnings. And then we're also going to be going over here with accumulated other comprehensive income. And then we're going to do over here a total column. Okay, so right over here, it says we've got the balances over here for 2020. So it's giving us 2020 information, but let's start with our beginning balances. So right over here, my beginning balances as of 1/1/20. So it tells us right here, I've got a beginning balance here in common stock of 350,000. Retained earnings was 90,000. And my accumulated other comprehensive income was 80,000 for a total of $520,000. So one of the things you may be asking is, hey, Tchaikovsky, what is accumulated other comprehensive income? Okay, so let's take a look at one of my favorite ones, which is going to be Apple. Okay, so let's go over here to Apple. And when we look at Apple Computer, and this is what's always a good time, is that I see over here in terms of Apple, let's kind of go down here. Okay. And there we go. All right, so Apple Computer is going to go through here, and they're going to be showing their net income for the 3 months and 9 months ended, right? So over here, their net income, it's going out a little bit. So over here, they've got their net income for the 9 months ended, and then you're getting down here, earnings per share and the like. Now, if we go further, what we're going to see here is we've got the net income, which is coming right from above here, right? But then we have these other items, okay? And these are other parts of what we call other comprehensive income or losses. And the reason why these are segregated here is I've got to balance my books. One of the things that is always going to make me have to go through and balance is when I have subsidiaries or other organizations in foreign countries. What happens is that are part of my entity. What happens is that every single quarter, these countries, so like if I hold, if I have operations in China and I'm selling things in China and they're paying me in renminbi or the RMB, when I show sales, every single time the US dollar and the renminbi have different translation rates. When I go through and I am translating from a foreign currency to the US currency, it's never going to be the same every single quarter or every single day or every single year. So what that causes is that may cause my income to increase or decrease based on the foreign exchange rates. So what that is that's not really income. And what we call it over here, so we have to kind of segregate this out as something like as an other comprehensive income or loss. And this is what we have here, change in foreign currency translation. So as a result of translating our entities' activities from abroad, this is may cause my income to increase or decrease. However, in the process of going through and doing this, it's not a real true part of net income. It's not really like a true loss. Rather, this is really what we call foreign currency gains and losses, okay? Or basically change in foreign currency translation. This is going through and impacting me if I have operations abroad. The next one is with unrealized gains and losses on derivative instruments and on marketable securities. One of the things that I didn't really get a chance to go over a lot of with you on is that when I look at the balance sheet for a company, and especially a company over here like Apple, Apple has a lot of money in marketable securities. What this means is they're taking their additional investment money and they're putting it into marketable securities. Under accounting rules, what we have to go through and do is that every single time, like when the value of my investment changes, I need to reflect that value of my investment change on my financial statements. However, what's very important though, is that say if I'm holding stock in Amazon, the stock of Amazon goes from $1,000 to $1,500. So all of a sudden, I've seen an increase in my assets for that dollar amount. However, I'm not selling those securities. I'm still holding them, but the value's going up here on my asset side. So what I then need to do is I then need to basically show over here that, wait a second, this is, I've got a change in the value of my investments. So therefore, I need to reflect this. I can't put it in income because I haven't actually sold the security. Rather, this is just a change in value. But if I'm showing this change here, so if my investments, say, are increasing by $4 billion, right? I can't just show this because I haven't sold the security. This is what's really important. If the value of my shares go up, then I'm holding in other entities, the values of these marketable securities, if they go up, I can't just record it as income or other gains and losses because I haven't sold it yet. So what I end up needing to go through and do is, this is what we call that other part of the transaction is going to go into here, into an unrealized gain or loss, and it becomes a part of the comprehensive income. And ultimately, this is going to be shown separately on our financial statements down here as other accumulated comprehensive income or loss. So this is going to kind of show up down here. This is how I'm going to go through and balance my balance sheets. So that's what this number really is. It's those kind of items that were essentially like foreign currency transaction gains or losses, unrealized gains or losses on common stock. Again, I'm not selling it. It's just unrealized because of different adjustments I have to make on my financial statements. So as I go through here and I read this problem, as it says, prepare a statement of stockholders' equity. So I've got my beginning balances here. Then I'm going to be going through it here. I've got my net income. Well, what was my net income? Well, my net income was going to be my sales of $700,000, less my cost of goods sold of $500,000, less my operating expenses of $80,000. So my net income is going to be 70 minus 50 minus 80, or $120,000. This net income is going to go in over here into my retained earnings, giving me a total over here of 120. Okay. Next thing we're going to go through and do, right? So this is, I've dealt with this and had an unrealized holding loss on available for sale securities of $60,000. So my unrealized holding loss, available for sale securities. And where I'm going to put this into is going to be into accumulated other comprehensive income or loss. So this is going to show up as a negative $60,000, gives me over here. Then what we're going to have over here is, beyond that, is going to be my dividends. I declared and paid a cash dividend. So less dividends. The dividends are going to be coming out of my retained earnings. So over here, that gives me 10,000. And it also tells me over here, I had balances in common stock. Basically tells me that it issued no stock during 2020. So this is not going to be impacted. So over here, my ending balances are going to be, for common stock, it's going to be 350. Retained earnings will have an ending balance of 200,000. At a beginning balance of 90, I had net income of 120,000. How did I get that net income of 120? It's coming right from over here. I'm subtracting out my dividends. It's giving me my ending balance over here in retained earnings. My accumulated other comprehensive income is now going to be only 20,000 because I had a loss on my available for sale securities. And my total here at the end of the day, as far as my owner's equity goes, is going to be 570,000. Now, when I add up 350 plus 200 plus 20,000, it should be that 570,000. So again, this is a new statement for a lot of you. You have not seen this before, but it's generally what is more often than not prepared than the statement of retained earnings. And again, it's to help us to go through and kind of break down the components in terms of what we're going through and seeing on the statement of shareholders' equity. And here's the one over here for Apple. So again, here you go, all the different adjustments with retained earnings. And that's, again, it's helping us go through and further explain out our equity balances. So again, thank you so much for joining me here today. And I'm looking forward to seeing you on the next Accounting After Dark video. And I will see you on the next one. Have a great one.